and welcome to our show.
Thank you so much. It's my pleasure to be here.
Oh, the pleasures are all ours. Would you like to say a quick hello to our viewers before we start?
Hello. Good to be here.
Perfect. Tell us a little bit about you and what you do.
Well, I'm a money manager. I manage about $1.4 billion, mainly in publicly traded equities around the world. And I do it, in a combination of private hedge funds and an ETF. And I've been doing this for about 28 years. Its time has gone by very fast because it's my passion. So I don't even think I'm doing work. I follow Warren Buffett and Charlie Munger's approach to investing, which generally means that we think of stocks as portions of businesses. We don't think of them as pieces of paper. And when we are going to buy a stock, we approach it as if we were going to buy the whole company. And so we're basically looking for investments that we can hold ideally forever.
Forever.
Forever. Anytime we have to sell something, we have made a mistake. And let me go one step further. Anytime most market participants are selling anything, they have made a mistake.
So we have to really keep it for the long run, right? According to your
Yeah.
philosophies. Okay,
That's
so you
right.
are a very well-known value investor. Let's start with talking about that famous lunch, since you mentioned Warren Buffett. You won that lunch at an annual charity auction for 650K, which is a lot of money, which was the record at the time. Looking back, was it worth every penny?
Yeah, the lunch, from my point of view, was one of the best deals ever. It was a true bargain in
It was a
terms of what
bargain.
it was a bargain when you look back now for what transpired after that. Warren has stopped doing these lunches. He was doing one of these
Mm.
lunches every year. The last year when he did the lunch, it went for more than $26 million, which was, I think, 2, 3 years ago.
Mm.
And so our 650,000 bid was a very small portion of that. So that was pretty good. And the second reason it was a bargain, and even the reason why I was interested in bidding for it and having lunch with Mr. Buffett, was for a couple of reasons. If we were alive in the time of Gandhi or Newton or Einstein or any other luminaries who have come before us, Churchill and so on, and if we had a chance to sit down and have lunch with them, the two questions that come up is, would we want to do that? And secondly, what might you be willing to pay for that? Right? And so we had a situation where I think Warren Buffett might be similar in their class of people, kind of the most accomplished investor ever, best investor ever. And he was alive versus all these people who are dead. And he was willing to take a bribe to have a lunch meal. And at that time, in 2007, when I was bidding on the lunch, I had based my entire career on his intellectual property and learning from him, from all his writings and talks and everything. And by that time in 2007, I had made more than $70 million directly from applying the principles of Warren Buffett. I felt like a tuition bill was due. And so I asked myself, what is an appropriate tuition bill to pay to a teacher who has made you $70 million richer? And I thought 3% would be pretty reasonable, might even be low. And 3% was about $2 million. So in 2007, I was bidding on that lunch and I said, okay, the maximum I will bid is 2 million. And if it goes over that, then such is life. I had bid for the lunch in earlier years, but it always went beyond the amount I was able to bid. So I felt like 2007 was the year. And then there's a friend of mine, Guy Spear, my best friend, and I asked him if he wanted to be a co-bidder with me because you can take 7 people to the lunch. And so I was going to go with my family, which was 4 of us, and there were still 3 seats left. And I asked him if he wants to come with his wife, and he could pay 1/3 and I could pay 2/3 because it was 2 seats versus 4 seats. And he said he was excited to do it, but he said that anything over $250,000 was too much for him. So I told Guy that he would be capped at $250,000. No matter what the bid ended up with, his maximum was 250,000. And above that, I would cover the rest. And as it turned out, the bidding ended extremely low
Mm.
at 650,000, less than one third of our budget. And it was even below my friend Guy Spears' budget. So he paid whatever 216 or whatever thousand, and then I paid the rest. And what ended up happening afterwards is that my only agenda and interest in doing the lunch was to thank Mr. Buffett, is to look him in the eye and thank him and so on. I did not expect anything more beyond that. That was
Right,
the only
right.
expectation. Mr. Buffett has very different expectations from these lunches. His
What did he
expecta-
offer? Yeah,
well,
what did he
his,
offer during that lunch?
his expectation is that he wants whoever won the lunch to feel like they got a big bargain. And so even when someone is paying 26 million, his focus is on making sure that the guy who paid the 26 million believes after the lunch that they got a big bargain. And so when Mr. Buffett came for the lunch, his agenda was to make sure that he delivered a lot of value to us, right?
Right,
And so the first thing he told us, so even before the lunch, his assistant gathered resumes and bios for all of us. And he studied all of them before the lunch. So he knew everyone well. He knew everyone's background. He had studied every person who was coming. And the second is, he told us when he came for the lunch that there was no time limit. He said that the lunch was starting around 1 o'clock. He said, I have nothing to do all afternoon. So he says, I am here for as long as you want me to be here. When you get tired of me, you let me know and I will leave. And so now I had another charity lunch with someone who was the CEO of Google at that time, Eric Schmidt. And that lunch was very different. Eric Schmidt's lunch took place in a cafeteria on the Google campus.
Okay.
And every 15 minutes, he was looking at his watch. Okay. And that lunch was scheduled for 1 hour. And at 1 hour, at 1 minute, he was gone.
Oh,
Okay. And so if I were to rate the two lunches, the Eric Schmidt lunch, 2 out of 10.
2 out of 10. Okay. What
out of
about the
10.
Warren Buffett?
I am a fair grader. It might be 1 out of 10.
Okay.
And
okay.
because there's nothing I remember about it.
Right,
There's
right.
nothing I remember which I can say, oh, this thing he said changed my life. For example, with Eric Schmidt. Warren Buffett, 15 out of 10.
15 out of 10. Wow.
15 out of 10. You know,
Wow.
it went beyond 100%.
Oh my
And
God.
reason it went beyond 100% is that for a number of reasons. So during the lunch, my wife was with me at the lunch, and I told Mr. Buffett that she is a big fan of yours. But the true love of her life is Charlie Munger, not Warren Buffett. And Warren Buffett got very competitive. He said, my partner, Charlie Munger, is a very boring person. He's a useless person to have lunch with. I am the one who is interesting, not Charlie. And he says, because you don't know Charlie and you think he's interesting, I'm going to set you guys up to have lunch with Charlie. And after that lunch, you will understand that I am the better lunch partner. Okay. So I thought he was joking about all this. But then 2 days after the lunch, I see an email from his assistant to Charlie's assistant copying me, setting up the lunch with us and Charlie.
Wow.
And telling Charlie in that email that this couple who also live in California, they seem to think you are more interesting than me. But we know I
Let's
am.
put it to
more-
the test.
He said, Charlie, you know that I am more interesting. So you're going to meet them and then they will know. Okay. And when I met with Charlie for lunch, first of all, I enjoyed the lunch with Charlie much more than Warren Buffett. Okay.
I don't think
And-
that's what he wants to hear, though.
yeah, well, his plan backfired. Okay.
I know.
And the second thing that happened was that a friendship got formed with Charlie. So I met Warren Buffett for lunch in 2008. I met Charlie Munger for lunch in 2009. And after that, I used to meet him probably with my family or my wife once every 3-4 months at his home for dinner. And also I used to play bridge with him at the LA Country Club once every 2-3 months. So it was a very wonderful, warm friendship. I also became friends with Warren. Warren, the friendship was not as close as Charlie because he was in Omaha. We used to meet him less often. But basically what happened with this lunch was it was buy one lunch and get infinite lunches for free.
Exactly,
You
exactly.
know,
I mean, now I understand why you called it a bargain because I mean, so
buy
much.
one and get 100 for free.
It's a good bargain. It's a
It's a
great bargain. Yeah.
yeah. And the other thing is that so many great things happened in my life
Mm,
because of the lunch. And like I told you before, my agenda was none of these things. My
mm-hmm.
agenda was just to spend the 2 million, to pay the tuition bill, thank my hero,
Right.
and that was it. Okay.
Mm-hmm.
And after that lunch, every year I go to Berkshire Hathaway for the Berkshire Hathaway annual meeting.
Mm-hmm.
I've been going for 30 years now. Okay.
Right.
And after we won the lunch, so Warren Buffett
Mm,
has private brunch on Sunday with
mm,
his close friends and his
mm.
board of directors, senior managers, etc.
Right.
And he would invite Guy Spear and me for that
Mm,
brunch on Sunday every
right.
year. And when Guy and I used to go for that brunch,
Mm,
I felt like we were the only two yo-yos in the
mm,
room because I used to
mm.
tell Guy, don't look behind us because Bono is talking to Bill Gates. Okay. So they would be NFL players in that room.
Right.
There
Right.
used to be Hollywood actors in that room.
Mm,
There
wow.
were so many politicians in that
Mm,
room. Only people who were
wow.
unknown was me and Guy Spear. We were the only two unknowns.
Mm,
And every year I said, they're going to figure out next year that we don't belong here and the invite is not going to come. But every year we keep getting this invite. So the thing is, the lunch was buy one, get infinite free. All these amazing
right.
things happened.
I mean, you did say that it was one of the best deals that you made, but let's talk about some of the other deals that you made because you have such good insight with the market. You did comment once that Korea was trading with this persistent discount. So, how would you describe the Korean stock market now?
So I have to say, I have been blessed to have made many trips to Korea in my life. And I consider Korea to be one of the most advanced civilizations. It's just an extremely highly evolved
Mm,
civilization. I always enjoy my time there. And one of the things that I'm distressed about nowadays is that the population of South Korea is going down. And it is going down at a very rapid rate. It's going down at a faster rate than even
mm,
Japan. So please produce more babies. My appeal to the married men and women, the young married men and women of Korea, is to please produce more babies. And for the young women and men who are thinking of getting married, please get married soon
right.
and please produce a lot of smart Korean kids.
Do
So,
you think
anyway,
that would affect the stock market in any way? Because I mean, with what's happening with
well,
the Korean
in the
stock
long
market?
run, any civilization which has a declining population is
Mm,
going to have a challenge with the total output of the country.
mm,
And that will get reflected eventually in the stock market. So,
mm,
if we take a country like Korea or if we take a country like Japan, with a declining population, the only way that GDP can grow in some decent way is by being an export powerhouse. Korea is an export powerhouse. But then you start getting into issues like what we have. There are two issues, for example, that start happening. One is countries like the US start reacting with tariffs and so on, which is the negative. The second is that because of the declining population, the labor costs are going up spectacularly.
mm,
So, for example, for Hyundai, it's cheaper to produce a car in Alabama than it is to produce it in Korea. And so the production is going to get moved to China and India and Alabama and so on, which has already happened. So that is the negative from the Korean point of view. And
mm.
so there are many reasons why we want at least a stable population, if not an
Right, right.
increasing one. But ideally, Korea would have an increasing population. The second thing I would say about the Korean market currently, and I'm not an expert, I'm an outsider looking in, and currently I don't have any investments in Korea, but the Korean market currently is very lopsided because
Mm,
of what is happening with SK Hynix and Samsung.
right. The
And
semiconductor industry is really,
yeah, and the thing is, so the good news is that there is a massive tailwind which South Korea is a beneficiary of because they are providing the pickaxes in a gold rush. I have visited with SK Hynix, and I have visited with Samsung many times. And I used to have an investment in Micron and also in SK Hynix. And it's very unfortunate that I violated my own rule and I sold these companies when they should have been kept forever. But these businesses, SK Hynix and Samsung and Micron, the memory business, is a very protected business. It is almost impossible for a fourth new player to come into this business. When I was interacting with the senior management of Micron a few years back, they told me that if one of our fabs burnt down, got destroyed, and we have all the patents and we have all the engineers and we have everybody who built that fab, and we try to rebuild the fab again, he said that we are not sure if we can rebuild it with the same production and cost as before, because he says that there's an aspect of manufacturing memory chips that is black magic. And so when you have a fab running, it's running because of some known things and some unknown things. And when you start messing with those things, it can become difficult. And so for a new entrant to come in, first of all, they would have to violate a lot of patents. Secondly, they would have to secure a lot of senior engineers and managers and so on, very difficult. And thirdly, it would take them 10, 15, 20 years to do it. So these three companies are not able to keep up with the demand right now. So if you have a Samsung mobile phone or an iPhone, the price of that is already gone up because the memory price has gone up. And the next generation, all the electronic prices are going up because the memory prices are going up. And the chips are on allocation. So when you look at a country like Korea, the indices are dominated by these two companies. They make up a large portion of the KOSPI index. And so it has been a wonderful ride for investors. So I would just say the following, that if you already own it, don't sell it. But if you don't own it, don't buy it.
So now is not the time to buy?
Just hold what you have. Don't sell what you have for a while. The party has only just started.
So do you think the KOSPI would continue to rally?
Well, I'm not as familiar with the rest of the KOSPI. And the rest of the KOSPI, my feeling is still be somewhat undervalued. But the headwind the KOSPI faces is the population decline. So if you look at companies in Korea which do not have an export bias, those companies face real challenges. The ones that do have an export bias, they have some tailwind, but there also, it depends on what's going on. Like I would say that even the Hyundais of the world, which are fabulous businesses, have challenges because of that.
Okay. So I guess it's a little bit related to that question. Looking back at all of your investments, what specific checklist items has saved you the most money? And how should retail investors like us, like me, incorporate that when we're evaluating a stock or a company?
Yeah, so my checklist, just to give you a little bit of background, my checklist came from the aviation industry. In fact, all checklists that are in use today have their origins in the aircraft and aviation industry. So in the US, the regulator of commercial airlines and airplanes, FAA, Federal Aviation Authority, anytime there's a plane crash, they send a lot of investigators, find out why the plane crashed, okay? And they spend an inordinate amount of effort to get to exactly why a plane crash happened. After they find out why the plane crashed, if it has something to do with some aspect of the design or the engineering of the airplane, they are going to look at things very pragmatically. So they're going to say, okay, let's say we make no changes. In the next 10 years, or in the next 20 years, if we make no changes, how many humans would die? Okay, they would try to make an estimate of how many crashes would take place and how many humans would die. The FAA has a definition of what a human life is worth. According to the FAA, it's not infinite. They have a specific number, and that number goes up with inflation. I think the current number is around $5 million. Let's say, for example, some airplane crashes, and they find that if this issue is not fixed, over every 10 years, 500 people will die, for example. So they will take the number 500, multiply by 5 million, and that's $2.5 billion. So whatever fix they are going to tell the airline industry to make has to cost less than $2.5 billion. If the fix is going to cost $20 billion, for example, they will not do the fix. And
Okay.
because the FAA takes a pragmatic approach to how it does this, two things have happened with aviation. Number one, aviation is very safe. And number two, flying is very cheap.
Mm.
Okay. If the FAA took an approach which said a human life is worth infinite, it would cost $250,000 to fly from LA to Seoul. Okay. That's what the
We don't
cost.
want that. No.
Exactly. So they have taken a middle ground and they only make changes. The only changes that ever get made in aviation for safety is after a plane crash. They never sit in a lab and say, let's make this change or that change to make things safer. They only do it after a plane crash. Okay. So I said, let's apply aviation to investing. What is the equivalent of a plane crash in investing? A stock where you lost money or a stock which went to zero. That's a crash with no survivors. A stock that went to zero. Okay. And a stock that went down, you sold at a loss, that's a crash with some survivors. So I said, what we are going to do is we're going to only make changes to my investment approach based on crashes. Because who am I to do something more advanced than the FAA? The FAA has solved this problem. So I said, okay, let's go look at the great investors of the world and let's look at the mistakes they made, which is companies they invested in where they lost money.
Right.
And let's see if it was visible before they lost the money that they were going to lose the money. In other
So are
words,
you looking for like signs?
yeah. So what I'm trying to say is that what I'm trying to understand is before a plane takes off, can we tell that it's going to crash or not? And so to give you an example, Warren Buffett, he's an open book, so I could look at all his mistakes. He made an investment a few decades back in a shoe company called Dexter Shoes. Dexter Shoes made shoes in the United States. And Warren Buffett gave them 2% of Berkshire stock to buy that company. Now, what happened almost immediately after he bought the company is the shoe business faced lots of foreign competition from China, Vietnam, etc. And their cost of manufacturing in the US was too high. And what ended up happening is Dexter Shoes went out of business. That was a crash with no survivors. So the question I asked myself was, is this a business that can be negatively affected by cheap foreign labor or cheap foreign competition? So when I'm looking at a company, I have this question. Let's say I'm looking at a bank in the US. Okay. Now, a bank in the US is not going to be affected by foreign labor. The question doesn't apply. But if I'm looking at a bicycle manufacturer in the US, that could get affected. All the bicycles in the world are made in Taiwan. All the brands, all the bicycles, except like Shimano in Japan, which makes great parts. They do well. So what I'm saying is, so that would say that if I'm looking at a bicycle manufacturer in the US, the checklist is say, Mohnish, don't go there. You can see what happened to Dexter. I made a checklist based on the crashes only. And I started making this checklist 16 or 17 years ago. It used to have 70 or 80 questions. Now it has 213 questions. And it doesn't take very long. Usually, the first time I run the checklist, I cannot answer a bunch of questions, which means I have not done the work. Let's go figure out how to answer those questions. Then we come back and then we find all the questions where there's a failure. And then we look at those failures and say, based on these failures, do we want to take off or not? We can make that decision. And so the checklist is fantastic. And
So do you do this every time you're looking at a new company? You do all 230
absolutely.
questions?
Absolutely. We do not take off. A pilot does not take off before running the pre-investment checklist.
Right.
Do you remember Peanut Girl?
The Peanut
You
Girl?
remember? You know Peanut Girl in Korea?
What is the Peanut Girl? No.
Peanut Girl is the lady who was the daughter of the founder of, was it Korean Air or Asiana Airlines? Korean Air, I think.
Oh. I think the precise nut was macadamia, but Peanut Girl, yes.
Macadamia Run. Okay. Anyway, I know her as Peanut Girl. Now, when that plane was about to take off, she was unhappy with the way the nuts were served. Okay. And she forced the aircraft to come back to the gate, and she was not very polite to the stewardess there.
Right.
That was not part of the pre-investment checklist. Okay. She introduced an extra item, the pre-investment checklist that was not required. And unfortunately, after that, Peanut Girl, who I think was very smart and should have been the successor to that business, was taken out and not given any chance to succeed her father. So anyway, pilot is not going to take off before running the pre-investment checklist. And we are not going to buy a stock till we have run the pre-investment checklist, because the checklist doesn't take much time, even though it's 213 questions. Once we've done the work, it may take less than 1 or 2 hours to run it. We only have 2 or 3 investments I make in a year. I have so much time. All I have is time. So I
And
have
you go through
enough
the
time.
checklist.
Yes,
Right.
absolutely. We go to the checklist. We look at what the failures are. Now, for an individual investor, because I have not published my checklist, it is proprietary. But for an individual investor, when they are about to invest, there are 3 important things that are important checklist items that they should look at. The number one reason why investors lose money in investments is because of leverage. So the company has too much debt, or the investors themselves are using debt to buy stock. Okay. So the most important thing when you're trying to make an investment is try to make investments in companies that have no leverage, zero leverage. And also do not yourself borrow any money to buy stocks. So are you familiar with a company called IKEA?
Of course.
All right. The founder of IKEA, who passed away a few years back, IKEA is a private company. Never went public, it's privately held. In his whole life of building IKEA, he ran IKEA for more than 70 years. He did not borrow even 1 Korean won or even 1 euro. He did not want to borrow money at all. And IKEA never went public to raise money in the public markets either. Every single store was opened out of the retained earnings from the previous stores. And the reason he did that is, for Ingmar, who was the founder, he wanted IKEA to last for 500 years. He wanted it to last for 1,000 years. And so he built the company with principles which will allow it to last for 1,000 years. And one of those principles was, we are never going to owe anyone any money, because if we don't owe anyone any money, no one can come and stop us from playing our game. So it's a very important thing for investors to not borrow money and
Right.
not invest in companies. So the best companies in the world do not need debt to grow. They can grow without debt because their business is so good. Okay. The second reason why investments don't do well is investors misunderstand the competitive advantage or the moat of the company, what Buffett calls the moat. What is the competitive advantage of the company? Now, for a long time, the memory business was a useless business. There used to be 20 different memory companies, and they were fighting each other and cutting the price and trying to get higher capacity. And in the end, no one would make any money. And eventually they went out of business, or they got bought out, and we end up with 3 memory companies: Samsung, SK Hynix, and Micron. And it went from not a good business to a very good business. And the moat became much better because now they have all the patents. And because the
Right.
density of the chips is so high, it's very difficult for a new entrant to come in. The processes are so complicated. Opening a new fab is so complicated. So the second is, we want a very strong moat. Now, let's say, for
Right.
example, I look at a company like Amorepacific. Okay. You may be a customer of Amorepacific. I don't know. Are you a customer of Amorepacific?
Can't say that I am.
Oh, can't. So women all over the world want their skins to be like Korean women's skin.
Oh, you're talking about Amorepacific.
Amorepacific.
Oh, definitely, definitely.
Are you a customer?
Oh, very loyal.
All right, very loyal. There you go. Okay. Now, the thing is, women all over the world want their skin to be like Korean women. They are envious of the skin of Korean women. And the best skincare companies in the world are in Korea, in South Korea, right? But I think that that's a business, even though Amorepacific has done extremely well, that is a difficult business.
Because the
Because
moat is a little bit
well,
shallow, I would say.
the issue is that there are so many companies trying to attack that market,
Right.
and women are constantly seeking even better treatments. They are never satisfied with what they have. They want even more, even better, even younger. They want all these things. It is possible that a company like Amorepacific may do well for a while, but they constantly face pressure. So sometimes a business like that, and especially a business which doesn't have a brand, but which has a great product, may not make it because the market is so difficult. Or
Right.
let's say if you look at a restaurant in Korea, that'd be a terrible business.
Because it's
It's
so
just a difficult
competitive.
business. Or some
Right.
hotel in Korea may not be a good
Mm,
business. So the second is try to understand the durability of the business and the
mm,
durability of the moat of the business. So no
mhm,
leverage,
right.
high
And
durability.
the, mm-hmm.
And the third most important thing is the quality and ethics of the managers and the owners of the business.
So
So you
governance
have
in
the,
one word.
the governance, yeah, the governance
Right.
and what is the quality of the people who are running the
Mm,
business? Do they care about the shareholders? Do they
mm,
care about the employees? Do they care about the customers? Or do they care about becoming wealthy themselves? It's okay for them to like the money, but they cannot love the money. They have to love other things. They cannot love the money.
right.
So
It's
you have
more
to
about
ask yourself,
value than profit,
do
right?
they love the money
Mm-hmm.
or do they love the business?
Oh, okay. That's a good question to ask.
Yeah, if an investor, forget the 213 questions,
Mm-hmm.
if the investor just focused on these three main issues,
Mm,
no leverage, quality of moat, quality of the people,
mm,
that's it. That
right,
will
right.
save you a lot of trouble.
So if you look at the investors, right? I think there are different types of investors. There are those who really study the company and they really take joy in researching and investing in a good company, whereas there are people who just invest in index funds. So do you think a concentrated investment in one outstanding business can realistically outperform simply buying and holding the S&P over the long run?
For more than 99% of investors, they should just buy the index.
Why is that?
Let's say an investor wants to buy SK Hynix, for example. Okay, they say, I don't want to buy index fund. I understand semiconductors. I understand AI. I think this company will do well, right?
Mm,
The question I would ask them is, let's say the market cap of SK Hynix, I haven't followed it lately, but let's say it's $500 billion, for
mm,
example. Okay, what I would ask them is, what is going to be the cash flow that SK Hynix will generate 10 years from now,
mm,
15 years from now, 20 years from now? And how does that compare to the 500 billion? So currently, SK Hynix may be making $50 billion a year, for example. What are they going to be making 5 years from now? What are they going to be making 10 years from now? And if an investor cannot answer those questions with a high degree of certainty, they should not buy the stock. Okay. Now, when you ask that question for some businesses, the answer can be very obvious.
mm.
So one should buy a business when the answer to these questions is very obvious and there's no difficulty giving that answer.
Right.
Okay. So, for example, let's say there is a power company in Korea, okay, supplying power to the homes of millions of customers. And let's say that power company makes $100 million a year in earnings. Okay. Now, people cannot change their power company every year. Okay. It's a regulated business. Usually, you only have one company that provides you power and so on. And the
Mm,
regulator allows the power company to make a certain return and charge a certain price and all of that. So it's a very well understood, well regulated
mm,
business. Okay. Let's say the power company is making 100 million a year and you can buy the whole company for
mm.
300 million. Okay. Which means that if you hold that company for 3 years and they are issuing dividends of 100% of their earnings, you get all your money back, right? In 3 years, you get all your money
Mhm,
back. You
mm.
still own the power company and it's going to keep giving you dividends for 50 more years,
Great.
maybe 100 more years.
Hmm.
So that has become a no-brainer risk-free investment.
Right.
Okay. Those are the only investments we are interested in. Risk-free. So usually the risk-free investments
Hmm.
are in sectors that are hated and unloved.
Hated and unloved.
Hated and unloved. If
Mm,
something is loved, please don't buy it. And so, what we are looking for in
hmm.
investing, we are looking for anomalies. We are looking for
Anomalies,
things,
right.
anomalies. We're looking for things that don't make sense.
Mm.
A power company should not be available for 3 times earning. But
Right.
in Korea, in the past, if you go back and look, there were many power companies available for less than 5 times earnings, some even at 3 times earnings.
Right.
Because people don't care about power company. Too boring. They're looking
Right.
for excitement. Now, in my case, 70% of my portfolio is in Turkey. I am not Turkish, even though I have a great mustache, better than most Turks have. I am from India. I am originally from India. I'm not from Turkey. I have 264,000 followers on X. Out of them, 50,000 are in Turkey. And they keep talking about me in Turkish. So I have to keep hitting translate to see what they are saying about me. Okay.
What are they saying about you? Things.
Mostly good
Yeah.
things. They usually just follow whatever I'm investing in. But anyway, the reason I got interested in Turkey and I started investing in it 7 years ago was because it was screening as the cheapest market in the world.
Right.
So I had a friend, I have a very close friend in Turkey he's the second largest fund manager in Turkey. And I told him about 8 years ago, I said, hi there, I would like to visit Istanbul. And if you don't mind, I would like to visit the companies in your portfolio. And I was just going to do this to educate myself. I did not plan to make any investments. I just thought Istanbul is a place with some great food. It's got some great architecture, great
Right.
history. What's wrong with visiting Istanbul? No problem. Okay.
But then you ended up investing in did you
So-
invest in a lot of the companies that
so-
you visited?
we have like 3 or 4 investments in Turkey, but
Okay.
the second year when I went, whenever we were driving to a company, that's when I started to ask him questions about the company because I didn't want to do any work till after I met them. So he told me about this company where he said, Mohnish, the market cap, you can buy the whole company for $16 million, 1/6. Okay. And the liquidation value of the company is $800 million. Okay. You could buy the company for 2% of the liquidation value. It's like being able to buy $1 million apartment for 20,000. Okay. So I asked him, what do they do? Why are they so cheap? He said, everything in Turkey is cheap. And I said, what do they do? So he said, they rent warehouses. So this company was the largest builder and renter of warehouses in Turkey. They have 12 million square feet, about 1.2 million square meters of warehouses. And their clients are Amazon, IKEA, Carrefour, Mercedes, Toyota, all these IKEA and so on. And 99% leased, inflation index leases, just collecting rent. So in Turkey, when I went and looked at the market, it was super cheap. So many things were trading at P of 1, P of 2.
Right.
I started buying this company, Reysas, this warehouse company, after I looked at it, ran the checklist and all that. And now we own 40% of the company.
Oh, wow.
Because it was so cheap. And the market cap used to be $15 million. It is now $1.5 billion. Okay. It has been 7 years. In 7 years, we have done nothing. We just hold the company. Okay.
So you just hold on to the good ones. Never let
hold
go.
on. And the thing is, the liquidation value used to be 800 million. Now it is 2.5 billion. So it's actually moved up a lot more. And what I realized, which I didn't know at that time, was the company is really good at building value. They're very good operators, very good. The father and son who founded this company, the son is only 41 years old. If they run the company for 30 more years or 40 more years, I will own it for as long as they run it.
Right, right.
Okay, we're not going to sell it. We're just going to own it forever. That's what we want to do. We want to look at things that make no sense. When you tell me I can buy a home worth $1 million for $20,000, I'm going to buy that home.
Right. That makes sense. That makes sense.
And then that home someday may be worth $3 million, and that's fine. So if you say every day that I'm not going to do anything, I'm just going to look at what is happening. Once every 6 months, 1 year, 2 years, you find something unusual that doesn't make sense. That's when you step in.
Right. So you did talk a little bit about your investment strategy, the Dhandho method. Related to that, what would be your idea of heads I win, tails I don't lose much investment opportunity in this age of AI?
Yeah, so the heads I win, tails I don't lose much is a very, very important framework for investors to have. The most important thing to consider before making an investment is, how can I lose money? how can this investment result in me having a loss?
Mm,
And really, the answer should be it can't.
it can't.
It cannot. So, going back to the company in Turkey,
Mm,
it has no debt.
mm,
It's got 1.2 million square feet of prime warehouses in these prime locations rented by Fortune 500 companies. If they don't pay the rent, they will get evicted.
mm,
Okay. If they want to empty the warehouse and give the warehouse back, it'll take them 2 years to empty the warehouse. They can't find another warehouse because warehouse is 100% leased. So I tried again and again to find. So how could the company go away? There could
mm,
be a big earthquake.
right.
It could be a big earthquake. It could destroy the warehouses.
Mm,
And maybe they don't have insurance.
mm,
Okay. So if there's a big earthquake, the warehouse is destroyed, and there's no insurance, we have lost money. Right. So I checked, do they have earthquake insurance? And I also checked, can they survive an 8.0 earthquake in their
right.
construction standards? I looked into that.
Mm-hmm.
Turkey had earthquakes in Istanbul, where their warehouses are,
Mm,
after I invested.
mm-hmm.
Not a single warehouse had even $10 of damage
Okay.
after the earthquake.
Right.
Well done, Mohnish. Well done.
Pat on the back. Pat on the back. Right.
So
How
we
do
are
we apply this though in like the AI sector, let's say?
so the way we apply it in the AI
Mm-hmm.
sector is we're not going to go there. I
Mm-hmm.
already told you, hated and unloved.
Hated and unloved.
We
Okay.
cannot go to things that are loved.
Mm,
AI is very deeply loved. You know what
mm.
used to be deeply loved? What used to be
Oh,
deeply loved was Bitcoin.
Bitcoin, right.
Bitcoin used to be deeply loved. And then when AI came, there was the next shiny object. So all those
Mm,
people who had Bitcoin, they dumped all their Bitcoin and they bought the AI. And
mm,
Bitcoin went from 100,000 to 70,000. And Bitcoin is not supposed to go down. It's like gold.
mm,
Gold went up, but
mm-hmm.
Bitcoin went down. So what I'm saying is now the people who own AI, they are
Mm-hmm.
going to be selling AI very soon, and they're going to buy
Mm,
the next shiny object. Do you know what the next
mm.
shiny object they're going to buy? The next shiny object they're going to buy is SpaceX. You know, the IPO of SpaceX is coming,
The biggest ever, right?
and it's a very big shiny object.
Mm,
So they will sell all their AI. So first they sold all the Bitcoin and they bought the AI.
mm.
Now they're going to sell SK Hynix and they're going to buy SpaceX.
SpaceX.
That's the next
And you're
shiny.
saying we shouldn't be doing that.
Please don't buy shiny objects.
Okay.
Please don't buy what is loved. Please
Okay.
buy what is hated and unloved.
Do
If
your
you
research.
if you are a kind of person
Mm-hmm.
who likes to buy things that are loved,
Mm.
just buy the index. Just buy the
Um,
index. But you know, the sad part is,
what's the sad part?
the sad part is people will listen to this with love. They will be entertained by my mustache.
It
But
is a great mustache.
yeah, but they're going to go buy SpaceX.
What would you do if you had, let's say, $1,000 and you're just starting, you know, to try to create this wealth? What would you do with $1,000?
With
Where would you
$1,000,
invest?
I would buy Berkshire Hathaway stock. BRKB is the ticker on the New York Stock Exchange.
All right. Okay. We'll
So
be sure to remember that.
no leverage, lot of
Mhm.
cash, very good management, very deep moat, very boring, very
Mm.
hated and unloved.
All right, thank you. Just a quick question. What is the surest way to build wealth in your opinion? Because you had so many experience in different fields. Like you worked at a tech company. It was like a high-speed internet company, right? And then you became a businessman of your own and then you're an investor. You had all these experiences. What is the surest way to build wealth? Can you break it down for us, like how you would do it if you were starting over?
You know, I'm a storyteller. You know, I tell beautiful stories.
Very
So
entertaining.
I want to tell you a story before I answer your
Okay.
question.
Okay.
Okay. In 1623, 403 years ago, the Native American Indians sold the island of Manhattan to the Dutch settlers who had come from the Netherlands, from Holland, for $23. The island of Manhattan, which was all forest at that time, was sold to the Dutch settlers for $23. And when people hear that story, they say that the Native Americans were taken for a ride. They sold very prime land, very, very cheap. There is something known as the rule of 72. And the rule of 72 is a very simple rule that helps you understand how long it takes money to double. So let's say the Native Americans had a investment officer, and they went to this investment officer and said, "We have $23. Please invest this money for the benefit of the tribe for the very long term. We don't need this money for hundreds of years. Invest the money so that it grows for the benefit of the tribe." And let's say the investment officer is not that great. He's just okay. And he can get a 7% return every year. Okay, that's all he can get, 7% a year. Okay. Now, the rule of 72 is a way for us to know how long would it take money to double at a particular rate of return. If you have a 7% rate of return, you do 72 divided by 7, it's 10. The money will double every 10 years. So if that investment officer is getting a 7% return, in 1623, he has $23. In 1633, he's going to have $46. In 1643, he's going to have $92, and so on. Now, if you take 10 periods of 10 years each, that's 100 years.
Right.
Okay. 100 years is 2 to the power of 10. 10 doubles. 2 times 2 times 2 times 2 times 2, 10 times. 2 to the power of 10 is 1024. Okay. We throw away the 24 because the math is simpler. So after 100 years, that 7% compounding on the $23 would have grown 1,000 times. So in 1723, it's going to be $23,000. In 1823, it's going to be $23 million. In 1923, it's going to be $23 billion. And 2023, it's going to be $23 trillion. And then we've gone 3 more years after that, maybe another 20%. About $28 trillion is the value of that money from 1623 till now compounded.
Right. Yes.
Okay. The island of Manhattan, if we remove all the buildings, all the buildings of Manhattan, but we just look at the land, prime land,
Right.
the entire net worth of every man, woman, and child in the United States, we put it all together, it's less than $200 trillion. 10% of that is not the island of Manhattan. The island of Manhattan is worth less than 1 trillion, maybe even like 500 billion without the buildings. So the Indians did not get taken. They just had a bad investment officer who did not get them 7% a year. So now let's answer your question. The most important thing that an individual can do, have a great investment return. There are only two things the person needs to do.
Okay, 2 things.
Number one, spend less than you earn. Okay? Spend less than you earn. So let's say, for example, every year you are saving 15% of your salary. Okay? You make $50,000 a year, you save $5,000 or $7,000. And you're 22 years old. You're saving $5,000 a year. The second thing that you're doing is you're not going to do AI investor because it's loved.
Right.
You're going to do hated and unloved. You're going to put it in Berkshire Hathaway, or you're going to put it in some index. Set it and forget it. And every year, just every month, whatever you save, you keep adding to that index. And one day you'll be 72 years old. 50 years have gone by, like the Indians. Okay.
Right.
And you keep putting, and then your salary has gone up over the time, 50,000 to $250,000, because you got more experience and all that. And you know how much money you're going to have? Too much.
Too much.
Money.
Is
Too
there
much.
such
You
a thing?
won't be able to. Too much. As much Amorepacific as you and your daughters and your wife want, you can buy as much as you want. You can buy whichever Genesis model you want. You can buy the best apartment in Seoul. You still have so much money. Because you only did two things. You spent less than you earned, and you did something very boring.
Okay, do something very boring.
Very
Be
boring.
very
Get your
diverse.
excitement other places in life.
All
Don't get
right.
your excitement from the stock market. Your listeners,
Mhm.
they're going to be so disappointed because they got no exciting advice. They only got boring advice.
But I guess 10 years
So
from now,
sorry to
when this
disappoint them.
video resurfaces, let's see. All right, I do want to end our interview with this question, and it's a little bit philosophical, but I do want to ask you why you still invest, because once you reach a certain amount of profitability, let's say, I would think that it would be less about the money and more about something else. So I would like to, know what that something else, what drives you as an investor is.
So each of us as an individual, between our genetics and the experiences in the first 5 years of our life, who we are as people is hard coded, not going to change. The way I was when I was 5 years old and the way I'm going to be when I'm 95 years old is the same. Okay.
The essence, yeah.
The cake is baked. The cake is baked at the age of 5. Okay. My own peculiar personality is that I like to play games. I like to play single player games. So I'm not the kind of person who'll be happy playing soccer, being one person on a team. I'm a better guy to play bridge or chess or something, single player games. So I'm playing a game. Now I realize that if you figure out compounding and you figure out that you spend less than you earn, that's it. You're going to make a lot of money. Now, I don't really care about the money because beyond a certain point, it's of no use to you. So I'm playing a game so first of all, to play this game, I have to know when I'm going to die. And the good news now with AI is you can go to God Google and you can ask God Google, when am I going to die? And God Google told me, Mohnish, you are going to die on June 11th, 2054. Okay. And I said, thank you so much, God Google. You made life so easy. Okay. So June 11th, 2054, I'm going to die. Okay. Now, what I want to do one day before I die, which is June 10th, 2054, is I want to have $10,000 left. So I have one engine, which is compounding money. And I have another engine, which is giving money away, the Dakshana Foundation, okay, which helps poor kids in India and so on get good education and all that. Both these endeavors are games for me. So one is a compounding engine. The other is a give back engine. I want the money given away to have very high returns to society. And Dakshana generates very high returns. So as I'm compounding, I need to give away. And as these two curves over time, the giveaway needs to become more accelerated. And so I'm just playing games basically so that by June 10th, 2054, it's all gone. And if I've done that, then it's been a beautiful game. That's
it. That's beautiful. So you earn more to give more, right?
In the meanwhile, I'm hoping that I get to have a lot of Korean meals.
What's your favorite Korean
food?
What's your favorite?
Well, I'm very biased towards the comfort food. The sundae.
Oh, sundae is great.
Sundae is so good. And then the pork bulgogi.
Oh.
With all the condiments. And I'm a simple man. Just give me the bulgogi and the sundae and I'm good to go. Let me put a couple of eggs into it and that's it.
All right, that's perfect. Okay, we ran a little bit over time. So sorry for that. But any last words for our viewers?
Yeah. I think this is so much fun. And I think you did such a great job with the interview. And I think we covered a lot of good ground. So it was a lot of fun. Thank you so much.
Right. One last word to live by if you want to be wealthy. By Mohnish. Let's end with that.
Well, I would just close with this quote that if wealth is lost, nothing is lost. If health is lost, something is lost. And if character is lost, everything is lost. So don't worry about the wealth. Worry a little bit about the health and worry everything about your character.
Right. Perfect. Okay. Thank you so much for this interview. It's been so much fun. And we got a lot of solid life advices. Thank you.
Bye.
Bye.
Good to see you. Bye. Bye.
Okay.